The crypto tank debut on the news that BitMEX faces legal charges against the CETC and Doge. Adding further to this decline, there was a second wave when President Trump announced that he had contracted COVID. On Friday, most of the coins seemed to be hit by these two fundamental drivers. However, on the whole, it does not seem too tragic. If you decide to keep your skin in the game and you're unsure if the DeFi craze is over, then I have some very interesting findings for you. Today I would like to talk about the houses that we call exchanges. These houses always make money regardless of the state of the market. If the market goes up, people need somewhere to trade. If the market goes down, people still need somewhere to trade. And the houses always take the fee. This time, however, given the current circumstances with BitMEX, we have been provided with a unique opportunity to capitalize on one of the biggest shifts of users that is happening right now. An exodus between houses, if you will. The thing is, there seems to be nobody that is speaking on this. But first, let me provide a quick drive on what has been occurring. What happened with BitMEX? BitMEX is the longest-running Bitcoin derivatives exchange. It allows users to trade BX contracts with a leverage of up to 100x. Naturally, this high-stakes, high-reward type of environment attracted crypto degons over the years as traders attempt to beat the system and earn higher profits on their positions. However, BitMEX has been notorious for operating within the shadows, away from any governmental regulation. Operating out of Seychelles, BitMEX never incorporated any required regulations such as anti-money laundering, AML, or Know Your Customer (KYC) procedures. They operated like this for several years and only required an email address to sign up with. This was until August of this year when BitMEX out of nowhere announced that its users would undergo a KYC procedure. That might have been too little, too late for them. Although they actively block any USAP addresses, it seems that the US's regulatory bodies have had their eyes on BitMEX for some time now. On October 1st, Sam Reed, BitMEX STO, was arrested in Massachusetts. This action was taken after the US Department of Justice announced that they were taking criminal charges against Arthur Hayes, Ben Dello, Gregory Dwyer, and Sam Reed, already arrested. The Doge charged them with violating the Bank Secrecy Act, a regulation that forces us financial institutions to implement measures to battle money laundering and tax evasion, a charge that could result in up to 5 years in jail. On top of all of this, the Commodity Futures Trading Commission, CETC, the SEC for commodities, also filed a civil suit against BitMEX and the members mentioned above. The regulator charged BitMEX for operating an unregistered trading platform and violating CETC regulations. What a calamity for BitMEX, eh? 2 US governmental bodies on their backs at the same time. The problem is that BitMEX conducts quite a significant portion of derivatives trading in the cryptocurrency ecosystem. For example, since July this year, they have consistently facilitated over $1 billion in volume every day. They facilitated over $6 billion in one day at the peak during this period and pretty much averaged close to $2 billion per day. The majority of this action is in BX, which accounts for over 90% of their volume. The rest is pretty much split between ETH and ERP. This is quite a significant level of volume within the ecosystem to be under attack. In fact, last year, it was reported that there are around 22k daily active traders on BitMEX. That was 2019. It could easily be well over 30k/40k daily users in 2020. On top of this, BitMEX was actually valued at around $3 billion when it facilitated $3 billion volume per day. Now, as everyone jumps off the BitMEX ship, this money and these users have to go somewhere. The money doesn't like to sleep. Most of these traders will seek alternatives. Following are 3 of the most likely candidates for users to head toward, and 3 great options for us to take advantage of. 1. Binance, $bean. You all must know about Binance, it does not need too much of an introduction. However, many of you may not know that Binance actually has its own derivatives trading platform, separate from the main Binance exchange itself. Binance Futures is now the leader. You can read full post on CryptoFans News, link available in text below.